By the way, we have another fintech coming up in the next conversation, so you may want to listen in. I'm talking about Angel One, which is, of course, a capital market play, but of course expanding into many other areas as well within the capital markets and wealth management, etc. as well. Pankaj, thanks very much. So let's get to it. Mangalam, Angel One.
Angel One, the stock's actually done well. In fact, over the last couple of trading sessions, the result was weak as expected, largely because of the weakness that we're seeing in the market itself. The sort of regulatory issues that came by in the F&O space led to their F&O volumes declining by about 26% as well. Overall, there was a decline in their revenues. Let's decode the trends of the future with the company. We do have with us Dinesh Thakkar, who's the chairman and managing director. Remember, the stock from a technical standpoint did come out of the F&O, did enter the F&O ban as well, which explains the sort of up move that we're seeing out there. Thanks a lot, Mr. Thakkar, for joining in. Two things that I want your thoughts on in the very near future. One, you said that things are normalizing. You expect the margin band to return to that 40 to 45% by the fourth quarter. What gives you the belief that it will go there? Secondly, even as there was an impact in the F&O business because of regulations, it seems like you lost market share. So the impact was a little more on Angel One versus the others. What explains this?
Okay, first of all, what I had said, we will return back to kind of like normal financial ratios, that is OPM and all that, by fourth quarter, not first quarter. Fourth quarter of this fourth quarter of the financial year. So we have gone, I would say this industry has gone through a kind of a like perfect storm where whatever should go against this industry has gone. Macros, be it our economic growth, be it FIS not investing, and majority impact is because of regulatory changes, which has now, I would say, absorbed by retail investors. We saw a bottom in terms of number of orders in Feb. We did almost below 50 lakh order per day, which is kind of like minimum. After that, we are seeing slowly kind of like revenue curve is moving up. So March numbers were better in terms of 53, 54 lakh order per day. And we are seeing this trend continuing in the like this month also. So that gives me confidence that, okay, at least revenues are now, revenue come has turned for better. And margin expansion in digital company, what happens when we take a cost to build a platform? There is a cost to build a platform and maintain the platform that we have already taken. So today we have a platform which can serve an order up to 1 crore 40 lakh without much increment in cost. So whatever revenue increment we see in this progressive months, that will straight away contribute to our expansion of margin.
Mr. Thakkar, morning. This is Reema here. Could you give us an indication of what the current orders per day are? February was sub 50. In March, it was averaging 53, 54. What would it stand at? And what was the peak or the average, say, when things were going, all right for the markets?
So average number of orders that we were clocking was around 75, 78 lakh per day. So today, as we speak, last March number, we have already disclosed that it's around 53 lakh plus. So that trend is continuing. So we don't disclose all this number. So maybe by a month end, we'll disclose this. But I can say that trend or positive trend that started in Feb continues.
Okay. What about your F&O market share? Have you lost market share? What does it stand at? Yeah. What would you attribute it to? And what steps are you taking to correct it?
Yeah. So what happens when actually we talk about market share? Market share in retail comes from Ultra HNI, retail, prop desk and all that. So when we lose market share, it is that retail is less active. So you will see market share dipping a bit. So it is not a point of concern if you see a graph of like 12 months, 24 months. Few months there would be some dip because retail is not participating as actively as HNIs are participating. So it is not a matter of concern for us. We are seeing overall other parameters in terms of engagement on our platform and all that. We are seeing engagement of these customers is equal or better than what they were a few months back.
Mr. Thakkar, hi, good morning. Prashant this side. On the F&O side, sir, and we asked this, we put this question to exchanges as well when we get the opportunity. Could you give us, again, same kind of comparison? What was the high there in terms of F&Os on a metric that of your choosing? Where are we now? And just to give us a kind of a scale comparison.
So, like in terms of number of order, this quarter, we degrew, our growth was like lesser by around 21, 22%. So overall, whatever impact we have seen in terms of F&O order, on month basis, I am seeing a growth of around 6 to 7% now for this past 2 months. So that gives a broad sense that, okay, retail are coming back. See, for retail, there was no reason for them to come back because markets were depressed. They did not see any opportunity and they were not in a hurry to really jump and decide that what kind of an instrument they had to buy, if at all not options. So what I am saying after this kind of stabilization in terms of uh, our news that are coming and the FIs inflows that are coming in, it appears that retail is getting back confidence to come back to the market. So what we are saying, if at all this trend continues for few 9 or 10 months, and customer growth rate that we are seeing, we are able to acquire in this bad condition also a customer base of around 5 lakh, 6 lakh per month, that will all contribute to expansion in margin in next 9 to 11 months.
You know,
Mr. Thakkar, just to, and we'll sort of summarize this with the overall numbers as well. You've been very aggressive in terms of, by the way, Nifty has hit 24,000, Mr. Thakkar. So, that's
Great.
talking directly, that's talking directly to your business. I mean, things have got to look up, right? I mean, it's just the way it is. For retail to come back, for optimism to come back, and of course, I mean, that is a direct impact on order flow, order volume, etc. So for now, 150 odd points in the Nifty, by the way, so 24,000, Nifty Bank hitting a new all-time high. So things are looking better, of course, much better. Mr. Thakkar, on wealth management, right? I think you've been, of course, you launched and you're growing rapidly. Could you give us a sense of what are you doing? What should the growth in AUM be? What are your targets for the end of FY26, say?
See, fortunately, we got a good team to manage our wealth business, and we were able to recruit top-class relationship managers and all that. And we just got licensed few months back, and in few months we were able to get an AUM of around 3,700, of which 3,200 is asset under management. So difficult to set a target for this thing. So usually the way we function is that we are building a base right now. So what is important right now is that all processes are in place, relationship managers, they are aligned to products that we want to sell. So I am seeing a good acceptance of our products in the market. So we are very bullish on that vertical.
right. Mr. Thakkar, as we speak, well, the Nifty is above that 24,000 mark. The IT pack is coming off lows. The Nifty Bank doing well. Reliance is the one which is powering that index ahead right now. Reliance reports its fourth quarter numbers on Friday. So we have Reliance, which has moved to the high point of trade as well. So that's about the market. Coming back on your customer addition, metric that you spoke about. In this market, you're able to attract around 5 to 6 lakh customers per month. Your customer acquisition costs have increased as well. So from the peak to now, how much do you think your customer acquisition costs have increased? And with retail perhaps likely to come back because the markets are making a comeback as well, how much would they reduce by? If you could give us a comparison on that one. At the same time, the revenues per order. In F&O, it has been coming down to around 21.2, and cash, it's increased to around 11.8 rupees per order. What's your outlook on these?
Yeah, on cost, there was a slight blip in the month of Feb and March. That is usually a seasonal, and even Google has increased the prices. So we have brought that cost back in this month. So now it is again back to normal. And plus, as market were subdued, so definitely to acquire a client, it is becomes bit costly. With market returning back to momentum and all that, we believe we would be able to get to the similar cost of acquisition what we had for past year. And on F&O volume, revenue and all that, again, it is a function of market. Once you see volatility and momentum in the market, lots of retail will come back and you will see that order, revenue per order would almost come back to normal. On cash side, because lots of people who stopped dealing in option because of ticket size increase and all that, they have come back in cash and they're doing margin trading and all.
All right. And finally, on the commodities front, your business declined 4%. It was explained by a high exposure to oil. But now gold is doing extremely well. Are you exposed to that, and would we see an improvement in your commodities business?
See, what happens when we talk about market share of overall basket, it contains oil, gold, silver, and all that. But retail tends to be more active when oil is active, and retail tends to be less active when gold is active. In gold, I think mostly HNI, ultra HNI would be taking a big kind of like calls and all that. So whenever this kind of like balance changes favoring precious metal and all that, you will see some dip in our market share.
For the year, Mr. Thakkar, for FY26, right? I was looking at some estimates. They are projecting a small single-digit decline in top line and a slightly larger decline, but single-digit decline as far as bottom line is concerned. Should we work with those kind of expectations? A subdued 26? What's your sort of sense?
See, FY26 this year would be a year of consolidation where we would be focusing more on getting back to OPM, and the growth is going to help. So currently we are not working on what kind of top line we will achieve because it's a function of market condition, lots of things. Internally, what we can do is that, okay, how do we bring in AI tool, get more cost efficiency, and how do we bring in more customer on our platform? So result of that, whatever revenue we are going to get, it is very difficult to predict at this point in time. But what we are confident is that we would be able to bounce back to an OPM of 40-45% by Q4 FY26.
Okay. All right, Mr. Thakkar, we'll leave it there. Good conversation as always. We wish you all the best of luck, and we'll continue to touch base with you over the next few months and quarters as well. Thank you indeed.